Did you know that according to star investor Cathie Wood, Tesla stock will skyrocket 200%? Wood has always been a known and strong supporter of Tesla, along with other analysts. Stay tuned and keep watching to find out what Wood has to say. Many analysts believe that Tesla is on the path to greatness, so to speak. A lot of them see Tesla flourishing more in the coming months. Moreover, experts believe that with the innovative projects lined up by the leading EV company, they will soon open yet another door like artificial intelligence. Today, you will see why Tesla stock will skyrocket 200% because of this, according to Cathie Wood. When asked in an interview, isn't Tesla going to be a Friendster in 5 years compared to many different new Facebooks? Cathie Wood firmly answered, absolutely not. Cathie Wood is a star stock picker and founder of $60 billion in assets ARK Invest, which invest in innovations like self-driving cars and genomics. After stints at other investment firms, Wood created ARK in 2014, hoping to package active stock portfolios in an ETF format. Cathie Wood is famous for putting together a fund company that focuses on emerging and disruptive technologies and thematic strategy. Her bold approach to investing and her predictions about Tesla have put her in the spotlight. Even though Cathie Wood has more than 40 years of investment experience under her belt, she became better known on a wider scale in 2020. Her ARK Innovation Fund returned almost 150% that year, catapulting her into a level of notoriety she hadn't yet experienced. In the past 5 years, the ARK Innovation Fund has returned about 45% annually. These numbers have turned Wood into something of a star in the investment space, especially when it comes to technology and innovation. Her asset management firm ARK Invest is known for its bets on technology and innovation considered disruptive. ARK's fund offerings include investments in robotics, genomics, artificial intelligence, blockchain technology, and clean energy. Wood is also known for sometimes making big claims about the future. She's an advocate for Bitcoin, and she insists that electric vehicle maker Tesla is still an undervalued company and predicts it will be worth $3 trillion at some point. Although others scoffed at her when she first made that prediction, with Tesla's market cap at $923.77 billion as of May 4, 2022, that prediction might not seem so wild. In fact, these predictions are one of the reasons investors follow Cathie Wood and invest in her funds. When asked about her thoughts on Tesla in 5 years, Wood said that compared to other auto manufacturers, Tesla definitely has an edge. She said that if one analyzes cars not by brand but by range and power combination instead, Tesla is the best pick among them all. Still, she said that most famous car brands like Volkswagen and BMW have done wonders in the last few years. It is just that Tesla is way ahead of them in terms of the range and power combination. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on their cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: they are failing miserably. Wood said Tesla's competitors are failing on the battery technology front as they are not riding down the consumer electronics cost curve which Tesla decided to run down. Wood explained that Tesla uses a lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. Thus, if companies decide to compete with Tesla, they'll have to sell every electric vehicle at a loss, and at the same time, they're losing their internal combustion engine business. Wood said that the reason why Tesla is so far ahead of its competitors is that those companies have just gotten started. She said that what they have delivered so far are cars that don't even meet the range or other metrics of Tesla's Model S. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty, but I think as consumers start to shift from gas-powered to electric and look at the specs of different cars, says Wood. She said that although they might still be persuaded by brands only, they won't have as good an electric vehicle as Tesla will provide. Wood said that they have been studying the CapEx schedules for traditional automakers against Tesla. She said that in the next year or so, Tesla is going to spend more on electric vehicles if it is not already. Wood said that 5 years ago, people were saying Tesla doesn't even have a shot to exist and that it is more likely to go bankrupt. But now, the company is spewing out cash and spending as aggressively as it can to roll out new plans, and Wood believes that Tesla will announce another one before the end of the year. Do you think Tesla stock will continue to soar in the coming months? Share your thoughts in the comments section below. Cathie Wood focuses on thematic investment strategies which focus on overreaching long-term trends. Rather than looking specifically at sectors and companies or chasing short-term trends, thematic investing looks for disruptors that are likely to impact what the world could evolve into. Hence, if a technology or disruption appears to be on the verge of a breakthrough, or if there are advancements and news around a specific related company, there could be short-term spikes in the price of a company or a fund. ARK Invest looks for companies that have different capitalizations, geographies, and other features that are likely to underpin what's coming in the future. Wood and ARK Invest believe that traditional investment strategies will be outstripped by a thematic approach. Therefore, many of Wood's stock picks include companies that are researching and implementing various cutting-edge technologies and potential solutions, including artificial intelligence, robotics, energy storage, and autonomous technology, to name a few, which are present in Tesla. This explains Wood's extreme bullishness on Tesla. In fact, Wood famously declared Tesla to be a value stock. This analysis can be explained through the fund's concept of convergence. Tesla isn't just a straight-up EV play. It's a company that melds or converges multiple technology sectors and platforms into one entity. More than an EV company, it's a robotics company, an energy storage specialist, and an artificial intelligence software developer. It even has its own glass technology group. And this plurality is what gives it its deep value and its exalted position in the market. Furthermore, Tesla is a disruptor in the transportation space. Again, this is straight out of Cathie Wood's playbook. ARK seeks out innovators and those changing the landscape in their respective fields. While Tesla might not be the only EV firm in the market, it is the one leading the pack and the one dictating the pace for its rivals in the race. According to ARK Invest, Tesla's robotaxi business should account for 62% of its enterprise value and more than half of expected earnings before interest, taxes, depreciation, and amortization (EBITDA) in 2026. Regarding the company's revenues, the electric vehicle business is expected to comprise 57% of Tesla's total revenues in 2026, while the robotaxi business will make up 34%. As for the number of cars sold by the company, assuming a worst-case scenario in 2026 in which 10 million units are sold, the company would have generated $372 billion in revenues and have a share price of $2,900 with a market cap of $3.3 trillion, reflecting a compound annual growth rate of 24%. Considering a bullish scenario in which 17 million units are sold in 2026, $513 billion in revenues would be generated and Tesla's share price would be $5,800 with a market cap of $6.7 trillion. That would include a CAGR of 42%. According to Wood, the total cost of ownership of an electric vehicle is less expensive than that of a gas-powered vehicle. And soon, we think within 1 or 2 years, and maybe even sooner with subsidies, the actual sticker price of vehicles, electric and gas, we think electric vehicle prices will drop below gas-powered vehicles prices and continue to drop. Our latest thinking is that by the year 2026, the average electric vehicle will cost about $15,000. Whether Cathie Wood is right or wrong about Tesla, only time will tell. What is known is that ARK Invest is betting big on Tesla's future. Tesla accounts for nearly 6% of the fund, with shares purchased between $256.67 and $326.30. That said, it is pretty evident that ARK Invest has a lot of faith in Elon Musk's Tesla venture. So much so that the stock represents a whole 10% of the fund's capitalization, which isn't much of a surprise since Tesla ticks a lot of the boxes when it comes to Cathie Wood's investment philosophy. For more Tesla stock content, visit our channel and watch our other videos.